Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Thursday, the 18th of October, 2007. The market's closed, and we had a mixed market today. The S&P 500 was down 27 cents, or about 0.18%. You can see here that it opened lower but closed higher than the open. That's why you have that green candle, even though it was, again, a negative close for the market. It did close again back below that advancing 20-day moving average. And the market is just kind of searching for some support in here, it still seems like. Yesterday we had that late rally that took a lot of people off guard, I think. And, as they were looking for, I think, a meltdown in there. But it did come back up above this level here that we've been watching, the 153.50 or so. And as long as that continues to hold on a closing basis, we're going to turn a little bit more optimistic because, again, the longer-term time frame is still bullish, so you want to give the benefit of the doubt to the buyers. And on the intermediate term, though, we've got a declining 5-day moving average. So it just seems as though we're undergoing a little bit of consolidation here, very similar, again, to what we saw over here after this sell-off in late September. We want to see that 5-day moving average flatten out and then the market rally above that moving average. Again, yesterday I was saying that maybe we're going to build a right shoulder here. We'll see. That doesn't really look that relevant right now, but we've got this little downtrend, so maybe breaking above 154 is going to help the bulls a little bit tomorrow. We continue to have big companies reporting earnings, and Google obviously is going to be the most important one tomorrow, so keep an eye on that. I think breaking back below 153 or so could put this market in jeopardy of a little bit further sell-off. 152.50 below that, and then we've got maybe in for a test of the 50-day moving average, so somewhere down near 150.5. I'm not looking for a sell-up, but you never know how this market's going to react to certain events, so you want to be aware of where there might be potential for sell-off to halt, or where a rally might find resistance. The semiconductors today, we have I think we have AMD after the close as well, but this market still continues to just be in the middle of this range here, working away at this prior level of resistance. You can see this little head and shoulders pattern on the socks. Did come down and meet its target, came down below that 200-day moving average, back up above it, now kind of fighting again in the middle of this range, which is 480 to 510, so not much going on in there. We did have good earnings from Intel, or a good response to earnings from Intel earlier in the week, and now this AMD may have a little bit of effect on it. AMD's not usually that powerful as compared to something like Intel, though, in its response to the overall semiconductor index. The IWM, that is the Russell 2000, yesterday I said that it looked like maybe we trapped some sellers below the 82 level. It's nice to see it did close back above that level once again, and we are seeing higher lows in here. But we do still have that declining 5-day moving average. We want to kind of be cautious until it flattens out and the market can get back above that level. I think that back above about 82.60 or so tomorrow could squeeze the shorts a little bit in here, and that's kind of the the more important level anyways. As far as where we've seen some prior resistance turn into support here. So about 82.60 I think is going to be important for the market to rally above and hold if we want to see this market make continued upside progress. Otherwise, you could look at this thing as breaking down. We do have lower highs and lower lows here on the intermediate term, but again, the longer term trend takes precedence over that, and that longer term trend is in an uptrend here on the daily time frame, coming down perhaps to this 200-day moving average at about 80.5. We've got the 50-day moving average below it at 80. It'll be interesting to see what happens when the 50-day moving average is able to cross up through the 200-day moving average. As you know, I pointed out a few weeks back that the so-called death cross, that is when the 50-day moving average crosses down through the 200-day moving average, occurred right in here, and that was a great time actually to purchase the IWM. So it's still kind of neutral intermediate term. I think that some reactions to earning reports could change that dramatically. Tech was the big winner again today as the NASDAQ 100 continues to power higher. It looks like a closing high here, not an intraday, but a closing high as it was up 23 cents or a little less than 0.5%. this market just continues to frustrate short sellers. And yesterday we saw it looked like maybe this trend line break was going to be something significant, but all it did was trap some sellers down in there, and they got squeezed. And again, from those failed types of moves often come fast moves, and that's what we saw today. It took out this level of resistance at about 53.60, so that's going to be our support going forward. 53.60, our first level of support. We've got that 5-day moving average rising once again, and we've got a little bit more support right at about 53.25. The NASDAQ 100 looks good. Let's see if it can hold up after some of these key earnings reports.